I'm a huge advocate for buying real estate for retirement purposes. You want it to build that long-term income, income that pays you each and every month, whether you're retired or not. I transitioned into retirement at age 50, and I knew what my income was going to be because my houses were already producing that. Just a quick thought this morning about interest rates specifically. There's a lot of fear in the market, and a lot of people are on the sidelines, not purchasing, not investing, or maybe even not buying their home that they want. Just plug in the variable and do the deal if it makes sense. If it doesn't make sense, don't do the deal. I mean, obviously you can work on your purchase number. You got to know what your bank's lending at. If you're going to borrow money on it, what your return on your money is. Maybe you're going to put your own cash up, can loan yourself money out of your 401k. You can, borrow money from the bank, put 20% down. I'm a huge fan of just traditional financing. And I would say that's what I would call traditional financing. That's going to the bank saying, hey, I found this property. They're going to vet it with you. They're going to say, all right, this makes sense, or hey, this doesn't make sense. And hopefully you have the tools to know if it makes sense before you approach the bank. Nonetheless, they're going to double check all the numbers before they hand out any money, because they're given 80% of the money and they don't even participate in the upside. So I'm a huge fan of the bank. In the long run, it makes a lot of sense. You don't have a equity partner in there. You've just got somebody you're paying interest to. But where I started with this was interest rates. We've gotten very spoiled over the past 3 to 7 years with interest rates. Because of the market factors, we've gone to nothing on the Fed rate. But historically, the interest rate that we're even now in a, let's assume it's going to go to 5.5 today, and maybe that pushes, mortgage rates to your upper, your sevens, mid sevens, upper sevens, wherever it may be. My local bank on commercial property, it's probably going to be 8.25, something like that. But it's a different type of product that I'm getting. But, in the 70s, and I'm just looking at this, in the 70s, a 30-year fixed rate started off at about 7.3, and the 70s ended at 12.9. 80s, it reached a pinnacle of 18.4% interest, and seesawing down to 9% in 86. The 90s, this is 6.9%. Here's the 2000s, 30-year fixed, dropped from about 8% down to 5.4 in 2009. And then the 2010s, the beginning of the 4% range. And then mortgage rate in the 2020s, obviously we're under 3% up until most recently, where it's, it's gone up as fast as it's going to go up. But you've got to understand that the Fed wants to have some meat on the bone so that if something happens in the market in the future, that they can adjust down. They're not going to rush right back down. And that's just my opinion. I mean, obviously the Fed doesn't consult me with what they're doing. They've talked about keeping rates right there around that 5% because it gives them ammunition in the tool belt to make changes in the future. So we just need to get used to this new normal. And even if it's not the new normal, yes, in the future you can, if you've got equity and all the things, or if you've got a deal that makes sense, you can refinance. But you can't always bank, don't do your deal saying I've got to have, this interest rate in the future. Do your deal based upon the variables that you have, lock it down for as long as you can, as cheap as you can, and do the deal if it makes sense. If it doesn't make sense, don't do the deal. Interest rates, we wish they were lower when money was cheap. You and I both. And I'll put a chart on the deal so you can look at these. But we're getting back to a norm on interest rates. We're not these historically low rates, and many people have got historic low rates locked in, and it's called the lock-in because everybody's got low rates. Nobody wants to sell because they can't replace what they've got at a reasonable rate because they're locked in on their money that they've borrowed. So it's a real thing, it's a real concern, but just know, do your deal if it makes sense. I'm a huge advocate for buying real estate for retirement purposes. You want it to build that long-term income, income that pays you each and every month, whether you're retired or not. I transitioned into retirement at age 50, and I knew what my income was going to be because my houses were already producing that. And it didn't happen overnight, I built this portfolio over years and years. So all it takes is a little bit to advance the ball every day. So don't let these interest rates scare you. Don't let the numbers scare you. Just do a deal if it makes sense. Anyhow, appreciate you checking us out. Have a good day. Like and subscribe if you've got any value out of this. And I'm guessing you might have if you've stuck around this long. Have a good day.